What's going on, guys? Welcome back to the channel. So today we're going to be going over the trade I took at around 10:19 this morning. You can see it right there, my execution, my entry price, how much I made, everything. So you know I'm legit. And I took this trade on M&Q, about 4 micros, nothing crazy, just because I kind of want to give the market time to see how the volume is going to be throughout this week, kind of like settle back down because, obviously you guys know Trump and everything. It's been very volatile market, and I'm not trying to get faked out or anything. So coming into pre-market, you can see that we're in a pretty clear downtrend. So we have a higher high, we form a lower low, then we form a lower high, we form another lower low, then another lower high. And I marked out these levels of liquidity right here because these are areas that I expect the market to have a rejection off of. And coming into market open, we immediately shot straight into this previous New York high area of liquidity. And I can see that we had a liquidity sweep because we're holding below this level of liquidity. And I can see that buyers are not in control anymore because obviously you can see they had a bunch of pressure up until about here, and then we get this doji candle, and technically it's a red candle. So I'm starting to see that buyers aren't really having as much pressure as they did have. So I can start looking for an inverse to take shorts off of this fair value gap right here. And I know this is a valid fair value gap because it is 118 points. And now I usually take my setups or my entries on the 5 minute, but we can see here that there's really no setup here on the 5 minute. And I realized this, and that we were kind of just not really chopping, but like all the fair value gaps were getting filled before the candles actually closed. So I headed on over to the 15 and I found this, and it was I think 120 points, something like that. Yeah, 120 points. So I knew that this was going to be a very respected fair value gap, or not really. You get what I'm trying to say. Like it's just it's really valid. So going on over, we can see next candle open, and I didn't even have to immediately. The sellers took control, and you can see, buyers. Okay, maybe a little bit. All right, buyers are starting to die down. All right, sellers seem like they're in control now, and all the time we're still holding below this level of liquidity. So this is still confirming the liquidity sweep. So we keep on going down. Sellers are really in control now. So now I'm starting to look for my entry. So put my stop loss around here. I actually got a pretty late, or actually it was an early fill. So price shot down really fast, and I didn't really get to have a good entry. And then we shot back up, and I entered shorts. So I probably could have been a little bit better about my entry. But I entered, let's see, at around 18,996. So we'll see what that is. 18,996. All right, so right there. Which, yeah, it's in the fair value gap. So preferably, I would look to take an entry off of, obviously don't enter in the fair value gap unless we've already inversed it or whatever, and it's just a little pullback. So I kind of made that mistake right there. But I had around a 35, 40 point stop loss, something like that. Usually I do about 30 to 35, but like I said, the market conditions like last week, I just wanted to give the market some chances to calm down with the volatility. So I had a little bit of a wider stop, and then I just had my take profits down here and right. Let's see, about right here. And the reason I have this random line right here for a take profit is because this is where the trade would have gone to a 1-to-1 risk to reward ratio. So this is where I would have taken my first trends. So we'll say, okay, whatever, enter right here, set my stop up here, take profit. Shit, it's fucking up. Hold up. All right. So stop loss right there. Take profit. We'll watch it play out. Now, boom, right there, you see the liquidity got hit. So I would have taken, whatever. You get what I'm saying. I took about 2 of my 4 contracts out right there. So you can see I took about 2 out right there, right here, for $159 profit, which isn't a lot, but I didn't size that much. So, I'll take what I can get. Green is green. So, and then I moved my stop to break even. And this trade didn't really run for like a while. It was on, I think it was about 60 points, 65 points, something like that. And I ended up getting stopped at break even. But something I did, I did exit emotionally because I don't know, I just didn't really want to lose. So I didn't really want to lose, like, I guess, some of my unrealized profits. So when I got stopped to break even, I only lost 1 of my runners, not 2, because I took another one out shortly after this liquidity got hit. I think it was on the 5-minute. Yeah, it was this one right here. Wait, no, it was this one. I took another one of my 4 runners out, like right here. I probably should have just left them in because most of the time this would have played out further. I don't really know why it didn't. But yeah, so I ended up getting stopped out of break even, and the trade won for about 60, 65 points, which made me almost like $300. Nothing too crazy, but I'll take it. And all right, that was a review. Let me know if you guys have any questions, if you guys have any recommendations for what you want to see, or if you have any definitely tips. I'm definitely open to learning some more. And make sure you like and subscribe. See you on the next video.